A major market regime change, a world financial shift is on us. It is being decided right now, and the market is already reacting to it in preparation. All the pro traders are talking about this, all the economists are talking about this, all market professionals are talking about this, but no one in retail is talking about it. No one in retail fully understands what it means that Kevin Warsh is now nominated as Fed chair. Policy shifts and changes that he's going to make is going to affect your trading strategy. You need to know about this. Here's what he wants to do. He wants to greatly reduce the Fed's balance sheet. What does that mean? Well, the Federal Reserve prints money by essentially buying US government debt. So they hold those bonds on their balance sheet. So those two things are basically synonymous, the size of the Fed's balance sheet and the amount of money in circulation. Everybody talks about this. They know that money is being printed and printed and printed. But nobody understands that Kevin Warsh wants to change this, and he wants to do something that almost no one has ever done before. So we actually don't know how the markets are going to react to this. You see, the Fed basically has two options. They can raise or lower interest rates, or they can print money or destroy money. Those are the two things. So lowering interest rates is good for the economy. Raising interest rates is to solve the inflation problem that raises its head every once in a while. The inflation problem comes from printing money. But to shred that money is not great for the stock market. Listen, most of you started trading in 2020, and most of you, by far the vast majority, have not been trading for more than 3 decades or more than 25 years. In 2008, that's when the big money started printing. Let me show you. This is the M2 money supply. This is the amount of USD that is available in the world via this purchasing bonds that the US Federal Reserve does. 2008, everyone knows what happened in 2008. We can see here that almost $1 trillion was printed to deal with the the financial crisis, right? And then they tapered off and they didn't print much, and they thought that that was okay. That was solving an inflationary problem that would arise from printing nearly $1 trillion back then. Well, you all know what happened in 2020. Like, this printing just hasn't stopped. Look at this. This is crazy over the years. What does that mean for you as a trader? Whoa, this is nuts. 2020 through to where we are, and we're still printing. This is the Iran conflict that we're printing for, and the one big beautiful bill. How does this affect you? It's because you've only ever known a market that goes up, and the reason why the market only goes up is because of this. Now, some of you might say, well, in 2021 and 2022, the market went down. Yeah, look at this right here. 2022, the US actually shredded some money. And what was the effect? A bear market. That was the effect. Now, this is nothing compared to what Kevin Warsh wants to do. Kevin Warsh has proposed that the US Federal Reserve balance sheet needs to be a tenth of its size. Will he get that? There's other folks that vote on the FOMC, and Kevin Warsh, although he is the chair, he is only one vote. Will he get a tenth? I don't think he'll get a tenth. It's not very likely. But will he get a significant amount of money shredding? Yeah, he probably will. Are the markets reacting to this? Check out the US dollar index here. We're finally starting to break out after chopping sideways for all of 2025. Yeah, the markets are reacting. Gold, this is going to be a hot topic because a lot of people love their gold trade. And for a year and a half, as the money just kept getting printed, you need to compare these two things, right? Look at the amount of money that got printed And you also saw a huge rally in gold. Those two things are directly correlated. Bitcoin. Bitcoin is the digital gold, right? Bitcoin went up along with all the ETFs that were introduced. Now Bitcoin can't rally if its life depended on it. Will it come back? I'm not saying that Bitcoin's dead. That's not what I'm saying. But here's the point. If there is just less US dollars out there, like significantly less, then there's just no ability to buy these instruments up. The NASDAQ just simply cannot go higher. Gold simply cannot go higher. Nothing can go higher meaningfully if there's less dollars. The result is that each dollar is of higher quality. It's of higher value. Each dollar has better purchasing power. That's why the USD is starting to rally. And I expect this to go higher. So, how does this affect your trading strategy? Well, you need to notice how your trading strategy is affected when the market rotates into its corrections and rallies. How does that affect your trading strategy? Because although I'm not necessarily saying that we're going to enter into a massive bull market, because the AI theme and spending that's going along with it is very, very real, and the effects it's having on the market is very real. I don't necessarily expect us to keep going up the way we did when all of this money was printed in such a short time. Don't expect that. All of this money still being printed, right? So back to the part of Kevin Warsh's strategy that nobody's ever tried before is he wants to reduce the Fed's balance sheet or the amount of USD out there by a lot, and at the same time, as he can get away with it, he wants to lower interest rates. One, lowering interest rates is very good for the markets and for business. Lowering the Fed's balance sheet is probably good for business, but it's not that great for markets. It's the prices aren't necessarily going to go up, but markets go up when revenue in businesses rise. So what it's going to do is it's going to make the markets act more naturally, where the markets should go up based on the fact that the companies that make up the markets, their revenues are going up. That's what should make markets go up. But instead, what's been making markets go up is all of this money printing. Many of you understand that concept, but don't understand how big of a shift this is going to be. Now, Kevin Warsh, we were waiting for his first FOMC press conference. We were waiting for him to say, what is your policy? Are you going to start shredding money right away? Instead, what he said is he's going to appoint task force to go and gather a bunch of information and so that they can make a good decision on what the best path forward is. But markets are reacting as if money is going to get shredded. I can tell by the fact that the dollar index is starting to break out again, starting to form a bit of an uptrend. I can tell by the fact that gold is not breaking out. It's continuing in this downtrend. I can tell by the fact that Bitcoin tried to break out and instead got rejected at its 200-day moving average. These are early signs, and when you pair the charts with the clear fundamentals, it starts to paint a picture of what is developing, and it is something that you have never seen before. Now, how do you prepare for this? Well, this is why we teach people to learn how to build edge. Because when you learn how to build edge, you can adjust your strategies. You can see what's working and not working. Because as we talk about, the markets are dynamic. Your strategy will constantly be evolving and changing. And this is the problem that so many traders run into. They might get some success for a few weeks or a few months, sometimes maybe even over a year, and then something stops working. And they blame themselves. But instead, you got to stop blaming yourself and you got to have a structured way of analyzing how your strategy is performing. So that's why we teach people a structured way to continually analyze your strategy because it provides longevity. Whatever the markets end up doing, however it affects your strategy, you can then go back, look at your trades, see what's changed, and be able to roll with whatever the market throws your way. It empowers you to be able to change and adapt with the markets. If you want to know more about how that works, watch this video.